Google just had earnings. Sometimes I like to stop what I'm doing, hop on, and make a quick video on you guys when like a big tech company or maybe a company, that's part of the FANG releases earnings, just to kind of go over, some of the numbers, where I see the stock going, what would I be doing if I had calls or puts. And so that's what we're going to do right now. You can see after hours, Alphabet stock rises more than 7%. As ads slowdown turns out to be less than feared. So for those of you who do not know, there was a pretty deep sell-off. I mean, definitely today, we from highs where we opened sold off about 5%. And since then, we are up almost 11% after hours now, which is pretty cool. And so one of the big things moving into this earnings was that Alphabet came out and said that they really were cutting their ad revenue and cutting their ads in general. So that really took a toll on the actual, company and what people thought that the earnings was going to be, which obviously it didn't take that big of a toll if we're up almost 11% after hours. So the company put cost-cutting measures in place during this quarter. That's what we talked about. They put cost-cutting measures in with their ads. Revenue growth slowed, but investors had expected much worse. And this is kind of what we talk about. There's a lot of people who start investing and a lot of people who start trading, and they're like, what happened? The company missed on the bottom and the top line, but now the stock's going up. Or sometimes a company will kill revenue and kill EPS, but it'll still go down. Now, that's because it's not just about the numbers when it comes to earnings. It's about, the numbers are important, but it's about outlook, and where the company is really giving guidance. And it's also that is something as bad as investors had expected. So in this case, we expect, especially with this earnings season, we expect some very, very bad numbers. Obviously, the economy's not doing too well. We have a recession basically upon us, and this whole CV thing is really, really messing things up. So in this case, the stock is actually rising because earnings weren't as bad as we had expected, and you might see that moving in with the bigger companies this week. So Alphabet shares rose as much as 7% in extended hours trading on Tuesday after the company reported earnings for the first quarter and sounded a cautiously optimistic note that a steep drop-off in ad revenues in March was starting to moderate. Here is how the company did. So their earnings were $9.87 a share, which was adjusted previously before this. Revenue was $46.16 billion. Cloud revenue, which is an important number, is $2.78 billion. YouTube advertising revenue, $4.4 billion. Traffic acquisition costs, $7.45 billion. So on the conference call with analysts and investors, CEO, I'm sorry if I butchered the name, Sundar Pichai, said that the usage of search, YouTube, and other apps and services was significantly higher as people looked for information on the coronavirus pandemic. And obviously, more people inside, more people using the internet. The two biggest search engines in the entire world right now are Google and YouTube, which YouTube is owned by Google. Pichai gave an example of increased engagement, saying coronavirus-related searches activity in the United States at its peak was 4 times greater than during the peak of the Super Bowl, which is crazy. And we kind of expect this with this whole quarantine going on. We saw Snapchat come out last week saying that they have a 44% usage year over year. And I believe the new not the new subscribers, but like the new accounts number was pretty crazy too. But ad revenue suffered even as engagement rose. And I kind of expect this because a lot of smaller YouTubers, a lot of smaller businesses are probably not going to have the money to promote on the internet anymore. It's just, at least for the short term till we figure out what's going on, kind of expected that. So in March, Pichai, I believe he said, in March, we experienced a significant and sudden slowdown in ad revenue due to the, I can't say the word because YouTube doesn't like it. Pichai said that the company delayed some ad launches as a result. During the call, CFO sounded cautiously optimistic that the worst was behind them, saying the decline in our search and other ad revenue was abrupt in March, and although we're seeing some early signs at this point that users are returning to more commercial behavior. It's not clear how durable, monetizable that will be. YouTube ad revenue grew 33% from last year. However, she noted that the brand advertising saw a steep drop off in March, which, back in March, everybody was going nuts. So I don't think that's kind of crazy to see a big drop off in March. Nobody knew how bad this was going to be. Nobody still really knows how bad this whole situation is going to be. But I think that in March, everybody kind of was just hanging on. Like, I'm not going to go spending money. Personally, me, I'm not going to go spending money on ads. I don't have that kind of extra cash laying around. And especially at a point where consumer sentiment, like, people are not trying to just frivolously spend money at this point right now. But overall, pretty good earnings. If you are somebody who bought this, congratulations. Because if you have calls, you're going to be making some good money tomorrow. If you have shares and this is a long-term investment, you're going to be making some good money tomorrow. Let's just take a look at some technical indicators. If we look at the Fibonacci retracement, we can see that obviously we have bounced from this 0.3 or the 38.2% Fibonacci all the way up to the 61.8 Fibonacci. Also, too, this is where the most recent really kind of resistance is up here. So if you are in this as a trade, of course, use your risk accordingly. I think we could see a bit of a resistance holding here. If not, we hold above it. Maybe we break, 6 or 7% to the upside. So, very, very good play. Congratulations to anybody who was in this long term. This was pretty good earnings for a pretty terrible time in the U.S. economy and the stock market. And also, congratulations, if you're in it for a trade. Use proper risk management. Like I said, we could see some resistances here and here. But overall, congratulations, guys. So hit the like button, comment down below. If you haven't already, I just put out a new video, a very, very important video on how to build wealth in 2020 with everything that's going on. For a lot of people, this might be like, this is not my year to go building wealth and amassing, the life that they want. But I'm telling you firsthand, it is, guys. So go watch that video. I give my whole wealth blueprint out. So take a look at that video, hit the like button, comment down below, subscribe, and I will see you